Welcome to the Strategic Life Podcast, episode 108, Your Money, with your host, Coach Mario.
Dr. Mario. Along with Frank.
Money. Or lack thereof. Or during this tax season, the need to have to give it away.
Or not have it at all.
Yeah. Or not get any back at all, right?
This is a good time for money, right?
Exactly.
It is.
So I'm gonna be honest. This one's not scripted out because there's so many things going on with money that we don't even need a format for this. Frank, what's happening with money? We got people. We got tax season rolling in. We got people doing things. We got banks crashing down. What's happening with our money, brother?
No one knows. And that's what. So those are all different things that.
Pick your favorite.
Man, it's a chain reaction, right? I think we'll start with. Well, we'll start with what? The most recent thing, right? The banks.
Yeah.
There you go.
Why the banks be crumbling? Or those were West Coast banks?
Those were West Coast banks. Why the collapse of SVB, right? And how does it affect you? Banks are a business, right? And like all businesses fail because they spend more than they make. Well, that makes no sense, right? The banks are, how could that be? I give my bank free money.
I give them a $38 overdraft fee every other day.
Well, how does that work with a bank, right? Like that's impossible for it to fail. Like I give it $100 and it keeps $100. Yeah, but it has payroll, it has expenses, so it has to grab your $100 and it has to invest it. Where do banks mostly invest their money? Well, that's on T-bills, treasury bills, right? So they give it to the government. So believe it or not, this is how it works. They get your money, use it as theirs, give it to the government. Government then gives them money back for using your money, and then you don't get anything unless
maybe.
Right? Unless you have some sort of savings account with a high yield, and even then you're gonna get point.
Right.
So that's the way it works. Believe it or not, the banks and the government make money off of your money and then tax you on it. Yes. And then so when they give it to you back, you have to pay taxes on that interest you get.
Great system.
And then you give it to the government, which then gives it back to the bank, right? So it feels like those two are just back and forth with your money. That's exactly how that works. So but that's impossible. How does that fail? Easily, right? When as you could tell. What happened to SVB in very, very easy terms, on March 1st, T-bills hit $4. In other words, where they were putting their money in, where banks put their money in order to get it back from the government, went up too high because of interest rates. That easy. There was no new deposits in there to soften that hit. So they just went under real fast. Now, when they went into the balance sheet in the book of business, again, you need to diversify. That bank did not diversify. What did they do? They said, well, we're going to be a technology bank. We're going to go after all these tech companies. Well, tech companies right now, like everybody else, are struggling. So there's new deposits. So it's not like these tech companies were pumping in new cash. They were staying stagnant. So now you have stagnant, revenue. You have high expense that went up because of interest rate on those T-bills. Mm-hmm. That margin, too much for them to cover. They went bankrupt. They couldn't do it.
Instead of diversifying the portfolio, typically the rule is no more than 20% in any type of vehicle. They just went.
No, they just didn't have it.
They didn't have it.
They just didn't have it. And then that caused some sort of frenzy, and everybody said, whoa, then give me my money back. So now you went from you went from high expense on the T-bill, low revenue because you're not getting new deposits, and then you have this scarce of everybody's like, no, give me my money. So that just made it even bigger of a gap.
Right.
And that's how that just caught fire, right? It went from, well, we're struggling, right? And you've seen it. You could read it on the news, right? They knew this was going to happen a week before, right? The T-bill scandal happened on March 1st. Like, they knew that. So if that's going to happen, they had a week to pull everything out. They couldn't get anything new, and that's what caused the mayhem.
And so what you have is a bank run, right? Everybody's trying to get their money out of the banks. There's a contagion because then there's a ripple effect going on.
Yep.
So now you don't have just one. Now you have, 5 now?
So then the market's reactionary. And since we're talking about your money, if you're listening or reading it on the news today, the big players in the game have known that information for days or maybe even weeks. So if by the time it gets to you via whatever vehicle, MSNBC, Forbes, Fox, whatever you watch, by the time you're reading it, there's already editors that have reviewed it, a publicist and a journalist who wrote the story. The company already knew about it, and then they dissected everything, told shareholders. So by the time you get the story on a company and how it's doing up or down, the big players in the league have already read that information days, if not weeks, before you.
You're the last one to know.
Yeah, you're the last one to know.
And made decisions around it already.
Oh, absolutely.
Correct. So what happened? What happened?
What happened was
Right. What happened was these guys, the banks then reacted. Oh, banks are evil. The bank, and then people started not depositing or holding on to a little cash or saying, "Oh, I'm going to diversify." And then you saw what happened with one day of, "Hey, we're scared of our banking system." The entire stock market just dropped.
plummets.
Right. So that goes to show you if we what power we as people have over these guys, as far as to be able to say, hey, wait a minute, you work for us, right? You're this big company, we're investing in you, you have our money, hold up. So that very scary thing, right? Now imagine if we all would have pulled out. Imagine if we all would have said, hey, no, you know what? I'm done with the banking system. Give me my cash. I'm gonna walk around with a bunch of paper. Like, oof, they don't have it. They don't have to cover it. There's not enough cash in the world, right? Like, I believe it's only 10% of actual currencies paper. The other 90% is all digital.
Yeah.
So imagine if you walked in there and said, no, give it to me physically. Impossible. So that, on the bank front, that's pretty much what happened. And
So
that's
what are
why,
if you,
who do we hate in order? Yeah, bankers, realtors, lawyers, clients, family members.
Frank at AnfraBusinessSolutions.com.
That's what I was about.
How long have I been saying that?
We're just gonna get you a plaque and we'll put it at the bottom.
How long have I been saying that? I tell everybody, hey, bro, the people you should hate in
Who
your
do
life.
I hate in
Bankers,
order?
realtors, lawyers, clients, family members, in that order. And
Bankers, then realtors.
yeah.
Wow.
Because, again, what happened to them?
What happened was
What happened to the rest of the banks, right?
We love you. We love our realtors and our bankers.
We do.
Just saying.
No, they do.
Frank,
They think because they manage a mill, they have a mill. That's not the way it works, right? And that's clear. You're seeing it now, right? Financial advisors are the closest thing you're going to get to experts on this, and even they get it wrong a bunch of times. It's just it doesn't work. There's no way they can track that. There's no way they're there to make money for them.
So
They're not on your side.
what are the long-term effects of like what happened here? How do you think it's going to be different moving forward?
Oh,
Maybe let's start maybe from the consumer perspective. Are people going to be more hesitant?
Oh, of course. Every time this happens, I mean, like, you guys, I guess that's a question you should ask yourself. When you read the news and you saw banks are closing, and it wasn't just one, right? It's been a trickle effect, right? We've been at 2, 3 already, and SVP was 16th in the country. So it's not, it's a mom and dad. No. They were 16th in the country. Think of all the banks in the country. That they were number 16. So it's not, it's a mid-sized bank. No, it ain't. Right, it's not your local little. I have 2 ATMs down the street. No,
right. Somebody hung a shingle, called it bank.
Yeah. What happens is people become hesitant. You start moving money around. You start taking out. You start reevaluating assessments. You start looking then. Okay, so if you're fortunate enough to be a private client, are you federal credit insured or are you SEC insured? Those are two different things. So let me give you an example. I have a mill, and I leave it in a regular bank account. That's guaranteed up to $250. I grab a mill. I'm private client. I send it off, and they're investing that money. Well, that's insured by a different area. I have the full mill. If I want to cash out on my mill, I can because it's being invested. It's not just sitting somewhere.
Right.
So the people that it hurts are the people who don't have the money. The people who have 20 grand saved up, nest egg for something, and then when that goes out the door, sorry, we just don't have enough. Imagine if you're right in the middle. Right, let's say you're between that 250, but you're underneath the mill for you to be a private client. Let's say you're at 500 grand. How long did it take you to save 500 grand? And then out of nowhere, your bank closes because idiot bankers decide to mismanage their money. Or
You're not the first one that's called idiot bankers. I've seen some reports.
Yeah, no, they're all idiot
where
bankers.
they're referred to.
Right,
in
but
that manner.
they mismanaged your money. They
Wow.
spent it all on private jets and donations and big signs at the Heat game. Like, imagine that.
You love the Heat, though.
Like, that's crazy, man. That's crazy. So, nothing against the Heat, you know,
We love the Heat.
but we hate bankers. I hate bankers.
you
Frank
go.
at
Frank at amfrabusinesssolutions.com.
Yeah, we'll just put the link in the bio.
For real.
at this point.
Okay, so that is the banking institutions, and what else? What else are we seeing? I mean, I know it's we're high in the tax season for you, yeah.
Yeah,
We
tax season.
even have to like pencil him in just to get him to sit here. It's an honor. It's an honor
It is.
No,
to
not
get him, even though I
not me.
can't see him with
Not
his
me,
camo. He must not want any bankers to see him with his
No, I
camouflage.
came ready for war today. I knew I was gonna.
Talent number 2.
No, I mean the
I just press buttons.
taxes. You know, tax rates are high. Nobody's getting money back. There's no COVID help this year, so taxes, as far as your money goes, you're gonna end up paying more taxes. And if you were gonna get a refund, you're gonna get a smaller refund. There's just no way around that today. Like we're coming off 2 years where, you know, it was free COVID help, and it was if you took money out of your retirement, it's forgiven, and all these loans were forgiven, and we just don't have that. And you saw it in 2022, and now you're seeing it when you do your taxes this year. You're gonna see somewhat of a hit on that. Federal brackets are going up. Like, you pay for all of this. Like, there's no such thing as free.
Correct.
Right? Like, it's government sponsored or government endorsed or government. No. You pay for it.
The people. We the people.
Yeah, all day long. When anyone tells me, "Oh, well, this country does it this way, this country does it," yeah, and let's look how your money's handled as a whole. You pay higher taxes. Nothing is free. You're paying for it somehow. Like, especially when someone gets in a car accident or something, like, "Oh no, but my insurance." I'm like, ugh, get an estimate first. Don't just use your insurance right away. It's sad, but I mean, someone asked me the other day. They were like, "Oh, I had this leak in my house, and I have some damage there." I'm like, is it under a couple grand? Because if it is, just pay for it yourself. You do not want to get on a homeowner's insurance hit list right now by having a claim under your name.
Especially in Florida.
Even if it's correct, because we are in Florida. Like, there's not that many options for homeowners insurance. So if it's small and you can afford to take out a grand or two, I would, even if it's not that expensive, you're going to have listed a claim. And even at that rate, I don't know what it is, but once you file a claim, there's a certain amount of time you can't file another. So if hurricane season were to come this year and tear your roof off, and you spent $1,700 fixing the leak from your toilet from the second floor, you're gonna wish you not fixed your toilet, because now your house is a toilet because it's gonna get rained in from the hurricane.
I'm going to explain insurance.
Please.
The best
Here we
way
go.
possible.
Please.
This is going to
Please.
we're
Your
gonna try
money
this.
live at 10.
This is going to be fun.
Here we go. Insurance now.
Insurance is that vindictive boyfriend or girlfriend that's dying for you to make a mistake so they can hold it against you for the rest of your life. Okay?
Has nothing to do with his love life.
I'll explain it. I'll explain it. You come in one day, you make a mistake, and now you're the bad guy. You're the reason this went up. You're the reason we're paying more.
But I was good to you for 18 years.
That's
I didn't
insurance.
I didn't have a single accident.
That's insurance. Insurance is the boyfriend or girlfriend that's waiting for you to make a single mistake so that they can take over the relationship. And how do they do it? They post it on Facebook and Instagram. So anywhere you go after that, everybody knows that you made a mistake. No
Are
matter
we
how
still
low
talking
you
about
are.
property insurance?
No, we're talking
or
insurance.
car
We're talking any
insurance?
kind of insurance.
This is true, because no matter where you
That's exactly how insurance works.
Okay.
You could be a safe driver for 20 years and no accident and no biggie, and your premium goes up minimal. As soon as you get into the first little fender bender, your fault or not, no, you're a horrible driver. There goes your safe driving. You need 5 years.
Adios.
You know how
Right.
many years it takes to get your safe driver back, which will double your insurance cost, right? At least with auto insurance, yes. It'll probably nearly double it, and I'm talking about experience here, Geico.
I was going to ask.
I was paying $232 for both cars. I bumper tapped someone, so this was I tapped someone, and then first of all, I didn't even realize how bad it was. I tapped them. I didn't even know what it was until like a few months later when I started complaining about the thing going up. We're like, well, you had an accident here, and we paid out $2,600. You paid out $2,600. I barely tapped that car. Like, if I would have rear-ended it good, okay, you know what? And it was a newer Maxima. I could see all the sensors. So you know what? You probably mess with that technology. I get where that could be 2, 3, 4. You know, I understand that. I barely tapped. Like, you might want to look that one up for fraud, honey, because I tapped that car. It couldn't have been anything more than $400 or $500 for paint. I digress. That was one tap. I think my wife, she had we both got rear-ended in another I got rear-ended in the rental.
Wow.
I got rear-ended in the rental and she got rear-ended, whatever. Either way, from $232 to almost $560 a month was what we were paying. And then I was like, okay, one accident was mine. The 3 other ones was we got hit. Mm-hmm. And she's like, yeah, it doesn't matter. You lost your safe driver's license, your safe driver status. It takes 5 years to get it back, at least in the state of Florida. 5 years. I'm like, I've had you guys for over 10, 12 years without a single accident. That's correct.
Yeah. Your battery dies one night. You can't pick up the phone. You don't call back to the next morning, and for 5 years you're begging and pleading.
And
I bet many of our listeners were not aware of that.
And
That's how insurance works.
And they're like, yeah, well, Florida's a no-fault state, which means, like, I was like, well, what does that mean? Like, I got hit. They're like, it just, in layman's terms, in short terms, just to make it easier, you're accident prone. I'm like, God, like that's what it means in their eyes. Like, yeah, you get rear-ended 5 times, your insurance will still go up because you are accident prone.
Yeah, that's
I'm free of that, and so are you, gentlemen.
Cancel, delete.
My insurance has come back to its normal place.
But that
was years of paying. Granted, I didn't. You know what I had to do? I had to pull out and do the local mom and pop insurance for a couple of years which only saved me another 100 or 150, but it's
still a savings, man.
It is
$600.
Every penny counts today.
But again, that's how they use your money. So then
money.
So then they grab. So then, example, they'll ding coach for that. They'll grab that. They'll raise mine, even though thank God haven't had any issues. And then they'll just play with the difference.
Right.
And then that's the way they'll sit there and say, well, it's the pool.
Increase. Yeah, it's a statewide rate increase.
It's like a levitation.
Correct.
That's what's happening with property insurance, commercial insurance as well. And, all of these insurance companies leaving Florida limits your choices. And so it becomes, I can only take that one. And that means you have to pay this premium. And there are no other alternatives in many cases.
Well, insurance companies then do the same thing as banks, right?
Yes.
And so you've seen that too, right? Where insurance companies say, well, we can't cover this damage, right? Especially here in Florida with hurricanes and stuff like that. Well, why not? Like, I've been paying my premiums. Why not?
Yeah.
Because insurance companies have grabbed your money. They've invested it.
And they're mismanaging like a
They
mo.
mismanage. God forbid, a hurricane comes by. They got to start paying out a bunch of stuff. And we got to take out of all this. Like, if we pull out of these investments, there's money that's out. Again, like the T-bills for the banks. Those are 10 years. In other words, you're grabbing that money and you're telling the federal government, hey, you could play with this for a decade. Hit me up at a decade and a day. When they have to pull out early, all that goes to waste. So so when insurance companies have to do it, when banks have to do it, when all these companies have to do that, they're playing with your money. They don't have enough to give it back.
So what's your best advice for our listeners in terms of
say for what? Car insurance?
Banking in terms of, pay your car off and you don't necessarily need the insurance. Maybe, I don't know.
I mean, that depends. Because
what are the choices?
I mean, I know what he's going to say. And if we were in the group chat, he'd be like, I told you, idiots, stack your chips, save your money. That's what he's going to say.
By the way, I called it. March 1st, I sent the T-bill thing. SVP happens March 10th.
He did.
I called it 10 days in advance.
He did.
And I called crypto too. I had somebody walk into my office the other day asking about crypto. And they're like, Frank, you were right, this NFT project. And I'm like, don't even mention that. Like, get out of my office. Like, get out of here.
Be gone.
Like, these crypto nuts. Here's crypto and why. Another thing, FTX. Right, we haven't spoken about that. What happened to FTX? It's not regulated. You want to know what's the best thing that can happen to crypto? It gets regulated. But the problem is these crypto nuts want to sit there and say, we're anti-establishment. The reason your stock does this every day is because you're so anti-establishment. So the best thing that can happen to FTX, Binance, CoinMarket, all these places is to be regulated. In fact, that makes no sense because you can lend on the money. Mm-hmm. Right now,
but then we can't send money and no one will know where it's going, so no one will know what we're doing.
That's the thing. Which
is why we like it.
So then they tell you that no. We don't want anybody to be looking at our books. We don't want anybody to be looking at this. This needs to be for the people, by the people. Yeah, that's money laundering. That's how fraud's
by
happening.
the broke people. Right.
So then ask where you're gonna get an investment for it. Like they know that's all either drug money or money laundry or war money. Like that's all crypto's being used for on a mass scale right now. So why would you? So again, if it was regulated, you can lend on it. So now you can go into Binance, FTX, you can go into these companies and say, hey, I have a bank account with you guys with X amount of Bitcoin in it. I would like to get a house. And they would treat you like a bank, and they would run an application and say, well, now we can apply all this currency to your credit. But that's not what they're doing.
And evaluate the risk.
And they can evaluate the risk on that, but that's not what they're doing. They're saying, no, don't touch our stuff. Okay, cool, have fun. Look what happened to FTX.
Go play.
That balance sheet was a mess. That balance sheet, the only thing that happened to FTX was the balance sheet, right? They had X amount in Bitcoin, and they had all this crypto, and crypto crashes. Again, same thing that happened with SVP and the T-bill. When that crashes, you don't have enough to pay. Like, all your investment, what you were using the interest to pay with, goes away.
Gone.
So now you have to start digging into the investment. And when that happens, you just don't have enough.
Wow. And so what do the people do? Stay away from crypto.
Coach?
Stack your chips.
Stack
Save
your
your
chips.
money. I mean, which is an interesting concept because, I mean, from especially with what you said, right? If you had the money, should you pay off your car or not? I would say Frank would tell you not to, right? Should someone pay off their car? Because obviously less car payment, but if you don't have, I guess, maybe a big savings.
Man, that depends.
Right? But that's a great example, right? Because some people think of that stuff like, okay, you know, most people can't, with the money they have in their account, right? Which, you know, more people probably have more, statistically, more debt on their credit cards than they do have money in the bank. Because I think it says statistically, you know, most people or most average Americans don't have even $2,000 to cover
Not even an emergency fund.
to cover an emergency expense of something like at that rate. So most people can't just pay off their house or other things or their boat or other toys. But in many cases, what most people couldn't, I mean.
So, great question. Should you pay off your car?
I say yes.
That depends.
You avoid the interest rate.
But okay, so they could save it. But if they have no savings at all,
But that depends. So
That's
because here's the way that question can come off. Should you pay off your car if you've already paid 5 years into it? Sure, pay it off. Don't get a new one. Should you pay off your car if you just got it a month ago? No, you shouldn't. Like the depreciation on that is going to be ridiculous. You're going to lose money. So that depends. Should you pay off a lease that you were over under on? No, just finish paying that off, and then your next car you can worry about purchasing.
Agreed.
So those all depend on A, your finance, and then B, what type of debt you're in. So I'll give you a good example. Frank, there's good debt. There's no such thing as good debt. Like, there isn't. Like, let's get rid of that right now. But the closest thing you're going to get to it, right? A good asset. Let's say real estate, right? If you own a home, you own a house, right? That's debt. Let's say $500,000. You put in 100 grand, easy numbers. You put in 20%. You put in 100 grand, right? You get rid of PMI, all this, boom, boom, boom. You have a $400,000 mortgage. If you're going to stay in that for a few years, and I mean a few 5, 7, 10 years in that house or that property, it's going to go up little by little. That type of debt, there's no reason to pay that off right away. Why? Because, well, if you can manage the monthly payment on that, you're fine. You're golden, because that's not a long-term play. You're not going to invest it. You're not going to... Now, if hey, no, my goal is to sit in this, pay it off fast, and then start using it as rental income for the next one, then yeah, pay it off. So it depends. It depends.
Yeah.
What should you do with your money? Manage it. You should manage it, not somebody else, not your accountant, not your financial planner. Like, you should be all over it, no matter how big or how little. If you have $1,000 in the bank account, you should be managing your $1,000, right? Don't let your environment spend it. Don't invest it. Don't wake up in the morning. If what you do is, well, I'm a real good florist, I'm a real good mechanic, then stick to that. Invest in what you know, what you can control. Don't wake up in the morning and say, oh, look, they're telling me about crypto or these stocks, and I'm going to invest today. GameStop is back up. Like, no, don't do any of that.
Don't go there.
That's a daily struggle. That's another job, and it's very difficult to maintain those things. You should be at all times stacking your chips, right? Like acquiring more cash, saving more cash. And that takes a little discipline. The reason these bankers and these crypto companies fail is because there's no discipline at the top level. Don't be like them. Have a little discipline with your money. Save something.
Yeah.
Well, I'm going to grab 10%, save that, and then spend the rest. No, that shouldn't be it. You should save as much as you can. Try to save 100% of it. You can save your way to financial freedom. That's another mistake people make. Well, no, saving money doesn't mean anything. Yes, it does, because when you have the liquidity, when you can purchase it, the coolest thing is when somebody tells me, Frank, you can afford it. Yeah, because I haven't bought it yet. The day I buy it, I can no longer afford it, right? I can afford a nice watch. Now, the day I buy a nice watch, the cash goes out the window. Right. That's all I have. I can't afford another one. So you want to be the guy, you want to be the girl that like, hey, you can afford it. Yeah, I can because I haven't bought it yet. So when you have that kind of mentality, you'll see you'll see more financial freedom.
Right. Got it. So in other news, and then maybe you can shed some light on this area. My property tax notice just came in, and I'd like to say that bad boy quadrupled. My property tax last year was $2,000, two something, and now it's $8,000. Why, Frank? What did you do? What were you and your banker?
Why do I get blamed for everything?
What were you and your banker friends doing back there?
Okay.
Any insight on that?
That has to do with your county and your
correct
city and your local,
yes,
and the school.
But I mean, someone else complained, and they're not from my area. They're I think they're up here, Kendall. I'm down south, but
property tax. We'll start with the easy stuff.
Here we go.
If
take note.
If you buy new construction,
this isn't going to help me pay it, but it's fine.
Your property tax is assessed on what the property was the previous year. So, if your house was built today, 2023, but last year it was nothing more than a plot of land with no building on it, and it was worth $20K, you're going to pay property tax on that $20K. When the new bill comes around, it tells you, whoa. Now there's not $20K. Now there's a house on it worth $500K. So then you get hit on the tax on the $500K. So that's new construction. Old construction. Well, no, I've been living here forever and it went up. It's not going to quadruple, but it is going up. You can ask for an audit on that tax. Mm-hmm. Most likely what the county is doing, and this goes for any county, right? Not just the good 305, you can contact them and ask for them to do a reevaluation of the property. Hey, no. You guys are assessing something based on a market value that's way too high. Please, do an audit, and they'll lower it for you. Are they gonna, lower it to what it was? No. Are they gonna lower it by half? Maybe not. But I have seen where sometimes they do. So you can call and ask for them to please
reassess it.
Mm-hmm. Yeah.
Get on the phone.
So you got to call and ask for, reassessment of that matter.
I hear a couple neighbors did. The wife spoke to a couple of them, but I believe nothing was done. But yeah, worth looking into.
That is
again, man.
That's leap. 2,000 to 8,000. That's a significant.
That's
push.
And I have seen a couple neighbors on the block had for sale signs. I mean, some of them probably can't cover that for sure.
Again, you can't overextend yourself. Mm-hmm. That's the number one reason we fail financially. We overextend ourselves.
I mean, but even at that
want
rate,
the car we shouldn't be driving.
But even at that rate, when most people buy a home, when they deal with your lovely realtors that you love so much, the realtors always tell them, hey, think about these things, or they don't. But in essence, that is a consideration. Well, how much are taxes? How much are these? So if you go in there with that, granted, if a few hundred can, over the course of time, which becomes this, $8,000 can break you, obviously that's, a tough one. However, that is a significant increase that could put someone who's just barely meeting it, hey, we can do this, we can, we can afford it, to then have it jump like that is crazy.
Okay. Let's go down that scenario. $8K. That's $800 more a month. Mm-hmm. If you have to sell your house because you cannot cover $800 more a month, you bought a house that you can't afford at all. That's just how it is. That $1,000 a month, and I know that's a lot of money. I'm not trying to belittle a grand. No. But if your expenses went up less than $1,000 and it forces you to sell your home, you overextended everywhere. It's not just on the house. Now, don't let people are going to buy what they want to buy. And we could sit here and blame the realtors and the watch guy and the car salesman. But at the end of the day, you should know your finances. You should talk to your accountant. You should find somebody. Like if you're listening to the podcast, reach out to us. Like you have help at all points. But what do? Oh yeah, no, I really like this house and it's going to go up in value. How much? And we're going to do, you must see it more than I do. Oh. You must be inspecting properties and you're like, this guy should not be buying this. Mm-hmm. But no, this area is going up and look, they're going to build a Target 3 months down the line.
Someone, actually, that same exact scenario happened. It was like a 1920s house, and I was like, look, this house has got so much. It's got this many problems. It has no hurricane protections. It's made out of wood. And then, the realtor was good. The realtor goes, but it's older than us, and it's still here. And we've had Andrew, and we've had this and that. I'm like, well, that just means it hasn't came directly in this area.
Right.
But he has a point in that aspect. But the lady did say, in another state, she bought in an area that was being improved. I want to say this was, I want to say it was North Miami. It was somewhere that the realtor said this is an up and coming area, and it is. But that's that doesn't. She's hoping to just buy something down while it's down and let everything else kind of increase. And it wasn't like she was going to gut it. There's some times where it's like, I don't care about all these comments and caulking in the bathroom and the grout tile falling. I'm knocking this out. She was going to do like, I'm just going to fix this and this and that. And in another area, I bought low and the area improved and I was able to pull out a couple hundred. And that's where she was coming from. So that dream does get sold a lot. The up and coming area.
But it gets sold because we buy it. I'm not, again, as much as I hate these guys, but I'm not going to blame the sales rep. I'm not going to blame the realtor. Like the realtor's there doing what you asked them to do, right? Oh, I want a 5-bedroom house in the middle of the most expensive part of the city. Okay, I'll show it to you. Like, all right, cool. That's on you for asking for some savagery like that. Like you can't afford it. If I walk in right now to the collection, right, and I'm like, hey, no, show me your finest McLaren. Right. That's on me. Like they're going to show you the McLaren.
Like I tell everybody, especially in inspections and all that, I go, if you call a roofer, they're going to try to sell you a roof.
True story.
So if you go in there and you look at a McLaren, even if you can't afford it, the finance manager will help you to try to afford it.
They got 10-year financing now.
Man, those cars are so easy to afford. Like everybody thinks that those cars are wild and some crazy dream and I'll never get to it. They have great programs. Like so a down payment on a $250,000 Aston Martin is $5,000. That's the down payment.
And how much is the monthly payment?
The lease is $2,200.
That is crazy.
It's doable. Like if you really think about it, like I when I went in there and the first time I did the math on that and I was like, I'm gonna $10,000 a month, $5,000 a month, and the guy's like, no, $5,000 doesn't matter your credit. We'll put you in one of these things for $2,000 a month, and I'm like, what? I'm like, you guys make it that affordable? Like if
I wouldn't say that's affordable.
Well, some people will, but they'll live in a condo in a 1-1 or something.
They'll pull up to their efficiency in their Aston Martin.
It's affordable if you want to get crazy enough.
Right.
Like there's people out there that are looking at that and saying, oh, wait a minute. Yeah, no, my rent is $2,000. I can get one of these for $2,000. Yeah, I make $5,000 a month, right? That puts me in $60K a year. Yeah. But now you're $60K and now what happens? Property tax goes up. Something goes wrong on the Aston Martin. Now what? $800. Now you just don't have the spread.
Now you're done.
Now you're like these idiot bankers, right? Who couldn't cover the spread on the T-bills and deposits. You couldn't cover your spread when something went wrong. So that's what happens. But man, again, like if that's the problem, hey, there's 4 sale signs because we can't cover the tax on the house. Yeah. That's, you overextended yourself. Or most likely you did your finances on the house and then you continued with your bad spending habits on other things. Yeah. Like I see that all the time too. Mm-hmm. Oh, I have this new expense, and the guy showing up to my office with a brand new watch or a brand new car or another pair of Jordans, or he's talking about a trip. I have a client that did that.
Not just the watch.
No, or sometimes it's all of it, right? Sometimes it's all three. Hey, did you see the new car? And I drove it with the new watch, and I picked up new shoes while I was at it.
And I had to buy a new hand to go with the new the new watch.
But I've seen it too. Oh, I want to buy a property. Hey, save a little money. I do, but I have this trip coming up. Wait, what? Yeah, no, I'm going to go to Europe for a month. Yeah, okay. Yeah. Your priorities are all out of whack.
Yeah, exactly. This has been Your Money with Frank Garcia, Coach Mario, and Dr. Mario.
Stack your chips.
We'll see you next time.